In this episode of We Talk Money, the Fed is trying and maybe failing at breaking the economy. Also, are UFOs or UAPs real, or is this the biggest distraction of our generation? What's up, guys? We're smack dab in the middle of earnings season. We have the stock market and Bitcoin that have been ripping bears' faces off all year. And now everybody's focused today on the rate hike and the UFO thing. So where should we start?
A rate hike.
Okay. So we're back up another 25 basis points. No surprise. There was almost 100% probability that was going to happen. Seems like the markets have a pretty muted response to that so far. A little bit of volatility, but kind of the same thing that we would expect during any other given Fed announcement. I was expecting even a little more volatility, but I guess when everybody expects something and that something plays out to be true, I don't know. The markets just are kind of flat. What do you guys make of this so far?
I just have one question for Jerome Powell, and that is, why though? Like, why? Why, Jerome? Like, why is this necessary?
I know why.
Please tell me, because I can't figure it out.
I think he's afraid of reinflation.
No, of course he is. But then why pause in June and then you get even lower inflation numbers between that meeting and this one, and then you raise 25? And they also didn't take any future hikes off the table. They didn't say that necessarily they were going to pause. My guess is they probably will, but why? Like, why are we doing this? Like, you're making the same policy mistake on the other side that you made in 2021. I don't know. I'm just going to scream into the void about it.
I love your passion about this. I just think that, honestly, I don't think anybody really knows what they're doing anymore when it comes to this. It's like,
here's what I think. I think they're going to raise rates as high as they can. Yeah. If the markets keep going up, they're just going to keep raising to give them as much cushion as they can on the downside when deflation inevitably hits, right? I don't know. It's like the easiest explanation I can think of.
I talked about this in the Daily Doe newsletter. Actually, I think it was today's newsletter. Basically,
what's the Daily Doe, Nikki? What is that?
Doe is our new investing newsletter. Become a better investor in 5 minutes a day, and it's free. And we write it, so you're going to get awesome insights on the markets, the economy, all kinds of goodies, financial and wealth building tips, etc. So definitely go
subscribed. Why not go to dailydoe.co?
Yeah,
to grow your dough.
That's right. I love it. I mean, we've even written about Barbie and Crocs and WorldCoin and all kinds of crazy stuff in the last 2 weeks.
Yeah, but this is fun because it gets us, staying engaged and putting out some of our best investing and trading ideas out there, and also hunting for what we think are going to be the next big trends.
I do got to say, guys, the cover images are giving very dark, very demon-like vibes. Maybe we
That's
can
what I'm going for, man.
Lighten that up a little bit. I don't know. I know
you don't like George Washington. You don't like George Washington drowning in a bowl of soupy dough.
It's a bit much, but I know fear and being scared sells.
I've got the Roaring 20s bubbly photo here as well.
That one is nice. I like that one. And the Twitter one is fine. But anyway, back to my point. I wrote about this in the Daily Doe. Back to the Fed raising rates and not knowing what the hell they're doing. There's this great point that was brought up about the wealth effect, basically, and how the stock market is only 5% from all-time highs. It's actually been ripping. We're way above the 200-day moving average. We have very bullish price structure, and brokerage accounts are increasing. Basically, anyone who owns stocks, they're going to be feeling richer. Housing prices have not really budged as much in many areas as people thought they were. So people aren't really losing a ton of value on their homes unless you're in the major cities like maybe Austin or, San Francisco or something like that. And you can protect purchasing power right now because, of course, what Travis's point is the Fed keeps raising rates and savings rates keep going up, and they're way higher than the inflation rate. So you can protect your purchasing power. So all of this being said, there could be this essential wealth effect that happens where people feel richer, they feel wealthier, they feel better about their financial situations because of this. And so that could be something that the Fed ends up having to fight, especially if people start exhausting services and they, we have a pretty strong services economy, but are we going to move from a services economy back to a goods economy? Are we just going to have a nice mixed bag going forward? Like, what is that going to look like? But I do think that that's something the Fed could end up having to fight. So they're probably not too thrilled about these stock market moves lately.
Yeah, I think I do think you're hitting the nail on the head. I think, both you and Chris said they want to hike as much as they can because they don't want to see a reinflation happen. But, offsetting some of the strength of the consumer, and we also did get a higher consumer sentiment reading over the last 2 weeks as well, which is just confirming your point, Nikki, about the wealth effect potentially contributing here. But offsetting that has been some data points that maybe aren't as strong, including things like retail sales, which are positive year over year, but have been decelerating. We got that report last week. I think retail sales are only growing about 1.5% as of the prior month. And then we also see business lending has slowed down, which makes sense given what we saw with the banking crisis back in the spring. Interesting to note, though, by the way, that KRE and regional banks have been performing very well so far through the earnings season, and the market has been pushing a lot of those banks higher. So it doesn't look like we're seeing a reintroduction of banking stress, but the banks themselves have really pulled back on lending. It's not dropping off a cliff necessarily, but business lending overall is down. So that could be offsetting some of that wealth effect. And we also have to remember that rate hikes do have lagged effects. I mean, the Fed has acknowledged this in the past, but they don't seem to be taking their own advice right now because they're not waiting to see the lagged effects at all. So, we could see the effects of some of these rate hikes further down the line, even though we may not be seeing them today.
Well said.
I mean, I think that until at the rate that this is looking, it's possible that we could see all-time highs before the market wakes up to what is going on and the lags take effect. At least that's kind of my thought here. It might just squeeze every short it possibly can out of this market, and then that's when we'll see the epic correction.
Yeah.
Guys, I would not be surprised to see this happen, especially with the way the market's reacting right now. Looking at this price action, I'm like, this rate hike was a nothing burger, guys, a nothing burger for this price. The market doesn't give a shit.
Absolutely just shaking it off. And if we take a look at the daily chart on the NASDAQ, I mean, you can see from the very beginning of the year, I don't remember the last time this actually happened, where basically the first week of the year was the yearly low and markets just basically ripped all year. But you can see, I mean, we've been in an upside bull trend, and throughout all of the bad news, right, throughout the potential banking crisis and inflation and rates hiking, like the market just continues to truck higher and higher. And granted, pullbacks I think are going to be expected, but yeah, I mean, we're only just a few points off of call it 5 or 6% off of all-time highs. I think the odds of us breaking to a new all-time high at this point are really, really good.
It won't make any sense. It'll blow everyone's mind, but I think that there's a strong possibility that it could happen.
And a lot of the macro bears have actually been capitulating in the last 2 or 3 weeks. We've seen some high-profile strategists like Mike Wilson and others that have basically thrown in the towel on the bearish thesis. So interestingly enough, maybe this is actually setting up for a rug pull, and maybe that's 6 or 12 months down the line. But yeah, a lot of the bears are finally capitulating and kind of recognizing what we've been talking about as the bull scenario over the last couple months. But yeah, it's very interesting times out there. I think a lot of people are certainly still confused about, why stocks have been going up. I mean, the QQQ, the NASDAQ's up 40% year to date. So that, I mean,
I'm hearing a lot of people talking, like professionals in the field, advisors, CFPs, talking about how this is one of the hardest market environments that they've seen. And it is. Well, a lot of people are out.
Why is it though? Because, we were talking about Nikki, you and Travis specifically in Q1, we're talking about the bull case. And like, yeah, it's hard if you inject bias, and it's hard if you stick to popular narrative. But I don't know why do you think people are saying it's hard? Because for me, as far as like trading and like looking at the crypto markets, for example, it's actually been relatively simple and easy. Like it's been a shift in market conditions. After a bear market, we're within that halving space, coming up about 9 months from now. Like, to me, there's nothing really hard here unless you inject bias and try to like override rationality, right?
I'll make it very simple. If you follow technical analysis, this market has been easy. If you don't and you follow fundamentals, this market has been absolutely a big pain in the butt.
Yeah,
That's
well
why I
said.
say, like, price action is truth, right? Like fundamentals, macro stuff, I have no clue how to predict what markets are going to do based on that. And that's why when people, poo-poo on technical analysis, I'm like, do you even know what you're saying? Like, yes, people use TA wrong. They try to predict and they put too much emphasis on certain things, but using price action as a guide to understand possibilities and probabilities and create plans based on those outcomes is absolutely the best thing, because price action is truth. And yeah, we can have opinions, we can look at macro data, but that's why I always say, whenever I look at it, I'm like, all right, yeah, you've got, different things that you can weigh in different ways, but I just don't know how to predict future outcomes based on that.
Yeah. And the classic market pattern of the markets, particularly stock markets, leading the economic data is true again this year. And that's oftentimes what makes things so confusing. We saw the same thing after the GFC in early 2009. Things were still getting worse economically, but the market bottomed and actually ripped a lot higher that year, by the end of that year. So that, I think, is also what we've seen this year. But I would agree that if you are just looking at the macro data, it has been a bit of a confusing picture. I mean, in March, we were having a banking crisis. You had the Fed, and they still are on a warpath to hike rates. And you have economic data, particularly in the manufacturing sector, that's still remained pretty weak. You had corporations reporting worse earnings, at least into the fourth quarter and kind of into the first quarter this year, although that's started to improve as well. But yeah, it's been a very mixed signal when it comes to the actual fundamental data. And so that's, I think, something that's been confusing. It's confused me. I mean, I thought, back in March when we had the banking crisis and we had the Fed still on a warpath on the rate side, that would create a headwind to the rally, but it really didn't. And now we're back in this bull market. So
Remember the tug of war I've been talking about since last year? Like, that's why it's been so difficult.
Yeah.
Let's talk a little bit about dystopian outcomes. I know the markets have been trucking higher, and whenever that happens, you start to have a lot of frothy, like FOMO money out there. And one thing big that happened this week is WorldCoin launched their token. So WorldCoin, for anybody that doesn't know, is let me pull this up, is a project that is trying to prove personhood through these orbs. So they have these little cameras that are now all around the world. And what they're doing is they are trying to create not only a token, but a network of these orbs around the world where you can attach a human through their eyeball to a wallet. And I think that, they're trying to solve a problem that is real. The problem of verifying identity in this digital world, especially in the world of like impersonators and AI, and, so much of our lives are going online. But the problem is, I think, the solution and the way that they're going about it, and, trying to launch their own token. I actually saw, it was funny, I saw a CoinDesk interview yesterday where the CoinDesk journalist was like grilling one of the WorldCoin founders and saying, like, why do you even need a token? What does this represent? And he was trying to kind of brush off the idea of like, well, this is a governance token, and, basically dance around that this is pure speculation and there's really no need for it. You could use Bitcoin, you could use something better than, a shit coin with terrible tokenomics. but I'm conflicted. On one hand, I know this is a real problem, but I just think this solution that they're trying to do is going to fail for so many different reasons. One, and I know Vitalik put some reasons out that he thought it was a bad idea, but just getting these orbs out, it just seems unnecessary. Everybody's got devices that use biometrics already. I think a solution using an iPhone is probably going to be a lot better than trying to get people to show up to these orbs. And then they're talking about universal basic income is the carrot for this shit. I don't know. It's very dystopian. It's very weird. And I don't know. I could be wrong, but I think this thing is going to fail massively.
I mean, I think one big positive is that Sam Altman is attached to it. That's what some supporters have been really excited about. There are certainly some interesting ideas here. I do share a lot of your concerns, particularly around like the tokenomics. They've been very cagey about what those actually look like. They say that they've been quiet about some of that stuff because of regulatory issues. Maybe that's true. Maybe that isn't. But we do know also that WorldCoin is at least partially funded by VCs. So, there's some questionable motives here, I think, behind the scenes. And I think even the use case of the digital identity is not really well fleshed out. Like, I didn't really come away convinced that this was a utility. Like, what's my reason to actually go and scan my eyeball and give my digital identity to some other entity who, frankly, I don't even really know what the ownership of that data looks like. So yeah, I share a lot of your concerns, but I do think it's interesting that Sam Altman's attached. And so I'll watch it from the sidelines for a while and see how things develop. But yeah, I'm not scanning my eyeballs.
Yeah, I mean, look, I think that people pointed out on Twitter. I was tweeting yesterday, and a couple of our community members even reached out and had some good points. But these are just a handful of the things that I think people need to think about. Like, one, they've already been caught with using shady business practices. Basically they were bragging about their 2 million initial users. Well, a lot of those people were really poor kids in third world countries that were like clamoring for free money, right? So they were using really shady practices to try to recruit people. And the MIT Technology Review did a pretty nasty hit piece on this. Also, yeah, the privacy situation, man. Like, I don't know. I just think this is the biggest honeypot. And could it be protected through zero knowledge proofs? Maybe. I don't know. And then obviously, like, the transparency issues and just the weird tokenomics. Like, if you look, I mean, they've got 1% circulating supply, and it's sketch. I don't trust it. But I do think it's a real problem. And I know this is something that Vinny with Civic was trying to figure out. And I don't know. I'm for anybody trying to solve the problem of verifying identity. I just don't think doing it with your own token and the way that they're going about this is the right way to do it. Any other thoughts on that?
Fiat lives on, I guess.
Yeah. I mean, look, here's the thing. They're saying they're going to give, I forgot what the dollar amount is of the equivalence of tokens, but people are just going to sell that. They're not going to hold this token. I mean, some people will speculate, but that's going to be immediate supply. And I don't know. Here's the thing. I'll trade the token, right? If it catches legs and it goes through a bull cycle, I will absolutely trade it with the goal of extracting value and reinvesting that in Bitcoin or getting fiat to reinvest in something else. But am I going to speculate and hold this token? Who knows? Maybe 2 or 3 years down the road, I'm going to look back on this episode and be like, wow, I was really wrong about that. But I don't know. I just have a lot of conviction about this one.
And typically you'll wait for more price history before you trade a token like this, right?
Yeah, absolutely. I mean, one thing that'll happen is you can see, WLD, I'm just pulling up the chart. If we just look at the Binance chart, you can see it's only got, less than 3 full days of trading history. So if you go down to an hourly chart, you can see, I mean, this is a lot of market makers, and, there's really no volatility. It opened up on the exchanges. It's dead flat around $2 to $2.50. What I look for is at least 1 to 3 months of price history, and you can see what's going to happen. It's either going to list and then immediately start to kind of sell off, or establish a range where you start to see like an accumulation range, or very rarely, this is like the lowest probability is it immediately starts to trade to the upside. So we'll see what happens. I'm going to give it at least a month, maybe 6 weeks to see what the price action looks like. And then we'll bring it up and kind of reevaluate.
Speaking of shit coins, did you have any thoughts? I saw you post in the community something about Doge.
Oh yeah. So everybody is really hyped up about Doge now because of Elon and X, right? Twitter, X.
Yeah.
I don't know. What are we calling it? Like Xing now? Like
Zeeting, Twixing,
Twixing.
Calling it Twitter. I don't give a crap.
Yeah. What a weird situation.
strange rebrand, throwing away 15 years of branding and literally a noun and a verb in tweeting.
Yeah.
So,
didn't he name his kid like letters or something?
Yes.
So I guess that tracks.
Yeah, he's obsessed. He's owned that X domain for a long time, and I guess he wanted to put it to use. So hey, he paid the money for Twitter. He can do whatever he wants.
I mean, that's true. That's true.
Yeah.
But yeah, I was laughing when I saw that alert pop on my computer because no wonder the Fed is raising rates. If people are buying Doge,
well, look. So here's and I think there might actually be something to this as far as a trade goes. Yeah, and I posted in the community yesterday that I can't believe I'm saying this, but yeah, there might actually be another trade in Doge. And look, we've been trading Doge way before the Elon days, right? Way before he got on here on SNL by the way, this was the top. The day or the week that he was on SNL pumping Doge was the top. So anybody that watched Saturday Night Live and bought Dogecoin lost over 90% of their money, right? Let's just not forget that. But Doge as a ticker, as a trading instrument, has had many, many bull cycles and many, many parabolic runs that if you're a disciplined trader, you can get in and make a shit ton of money on. So I was looking at this and I started to see crypto Twitter or crypto X, whatever we're calling it now, start to look at this. And I think there is something to it because, Elon's goal is to basically make X the WeChat of the West, right? In China, they have these super apps, or really just a handful of them around the globe, like Line, I think is big in Japan, where you have payments, you have e-commerce, you have social media, you have all that stuff packaged in one app. And I think Elon is smart to try to go after and build something like that, because if he succeeds, that would be tremendously valuable. I think in the US, it's going to be harder to pull off because there are so many competitors. And I don't know. I want to hear y'all's opinion on that. But the biggest thing is like, yeah, if people start to speculate that is coming true and he's going to choose Doge as the currency, even if it's bullshit, even if it doesn't actually work, this thing could trade up. And there's a big resistance level around 10 cents right now. And if we start to break that, might be worth a trade. We'll see.
Yeah, I think the idea of a super app in the US is a dead idea. I mean, I think it's been tried so many different times by so many different companies, but there's path dependency here. The US developed a robust app ecosystem with individual verticalized apps, whether it's Uber or PayPal or Apple Pay, or it's Amazon. All these different services are run by very dedicated tech companies that have large user bases already. So I think it'll be very difficult for any app at this point to become a one app for all type of destination. So I think the idea of a super app is questionable at best. Now, I do think Doge being used as a potential currency for microtransactions on X is very, very possible, if not likely. And we've certainly seen X or Twitter already pushing towards things like subscriptions and user payments. And so I think that that is definitely a real possibility. Now, right now, X/Twitter, they're using services like Stripe for creator payouts and things like that. So we're not seeing them utilize Doge yet, but a year, 2, 3 years out into the future, definitely a possibility.
Well said. Let's talk about earnings, guys. So we're smack dab in the middle. We've had some of the big boys reporting. What are the vibes? Are they immaculate or less than immaculate?
Yeah, I would say earnings season so far has been a little bit of a snooze fest. Interestingly, I think a lot of stocks went into this earnings season with a worse setup because, stocks, especially like Netflix and Tesla and some of the tech stocks that have rallied so much already this year, went into their earnings reports with very robust year-to-date returns. And so you had a high hurdle there. They would have had to have produced really exceptional Q2 reports for those stocks to really moon higher. And like last week, we saw both Tesla and Netflix selling off after their earnings reports, despite the fact that I thought the Q2 reports looked pretty good for both of those companies. So we saw those pull back. We saw Spotify pull back more than 10% yesterday. They didn't really put up numbers that were that great on the profit side. Now, their revenue growth, their user growth still looks quite healthy. But overall, I would characterize in the tech sector, certainly it's been a little bit of a disappointing stock performance, not necessarily bad in terms of the actual numbers themselves. One bright spot so far has been Google. Google yesterday did report better than expected numbers on the bottom line and the top line. So they saw an acceleration in revenue growth. So the ad business is improving. You also saw them actually have some efficiency gains in the second quarter. So operating income grew even faster than revenue, which allowed them to beat earnings expectations. So Google is finally turning that ship around a little bit. I would say the quarter was good, not exceptional, but a good quarter. And I think the stock was up something like 4 or 5% after the report. So there was a big stinker in Snapchat. Of course, that is nothing new. It's like clockwork every quarter for the last, 6 or 7 quarters. And I can remember Snapchat sells off 20 or 25% post earnings. Yeah,
is this thing a zero?
I think long-term it might be. There's probably some value there in the user base for someone. It's probably not zero if it gets sold at some point to someone who could actually do something with the user base. But they give so much stock to employees. They don't make money. They're losing share to TikTok. It's just a really, really ugly investment case there for Snapchat.
Yeah. What else is going on in the stock world? Nikki, I know you made a lot of money on Carvana. I haven't looked at that actually in the last couple of days, but that was just an epic short squeeze that you called out in the Daily Doe, by the way. So if you're not subscribed, you missed out on that one. It looks like it's been pulling back after having a big gap last week. Talk us through this. What happened? Is the squeeze over? Do you think there's more potential upside? Any lessons that we can pull from this? And are there any others that could be in the short squeeze category?
A lot of the squeezes, I actually wrote about this in the Daily Doe. I think the main topic of the newsletter was this about squeezes going on right now. And a lot of them have moved a lot. Like Wayfair has been one that's moved a lot, Carvana. There was a list that I put in. I did a screen on Koifin and put all the different high interest stocks in there. So check that out on the dailydoe.co. But basically Carvana, the biggest lesson for Carvana, I think from a trading perspective, anyone who's a trader, there's the list. So a lot of these have moved quite a bit, but I think that never let prior trades affect new trades, because we've been in this funky market environment over the past, 6 to 8 months. Well, actually, let me just say since last year, basically, when the market was trying to figure out what it was going to do. And a lot of swing trades weren't really working. And then this one came along and it was just an A+ setup. And when you see those A+ setups and everything's aligning, the technicals are aligning, the short interest is there, the momentum is there, that's when I perk my ears. And just because prior trades don't work doesn't mean future trades won't work, especially when you're shifting market environments. So the biggest lesson is the market environment was great for this trade over the past few months. It's been epic. And that's why it's so important to align your trade setup with your market environment and size it according to that market environment as well. So that was kind of like a big lesson that came out of it, especially for our community members. And also scaling, like that's how I was able to hold this since May. I got into this position mid-May. And I've been holding it ever since. And, the reason I've been able to kind of continue to squeeze more out of it is because I used a scaling out approach in my trading. And so that's another important lesson. And I Chris and I were laughing a lot, behind the scenes about this trade because he was like, joking with me about, holding more of it and whatnot. And I was like, I know my gut and I know that this is the right thing for me, but everybody has a different trading style.
Yeah, it's tough when you have a big trade and you're like, man, this is like the most amount of money I've ever made, or like you're looking at that unrealized profit. It can be hard not to just close, right? But like, what if the trade was meant to do a double beyond what you thought was an insane amount of money, right? That's how you really make life-changing gains, is like when you're staring at those numbers, even if it feels uncomfortable to hold. Like if you think the trade is intact, yeah, you could scale out, but I don't know. Sometimes I think it's like you just got to grab it and like let it all ride. But I say that like that's kind of rare. It does make sense to scale out and to like sleep well at night and all those things. But there's some times that I've done it where I'm like, whew, yeah, if this crashed back to my entry point, I would regret not taking profit, but fuck it, let's go.
Now, that's the thing. This is why we have risk tolerance as a sliding scale, everybody,
Yes.
ladies and gents. It's a sliding scale and everybody's going to do it differently. But for me, Carvana was just looking toppy. So I didn't want, look, GME was a very unique short squeeze. Okay. Like it goes in the categories Volkswagen, Trav. It's like one of the greats. They don't happen all the time. And you don't want to assume that every squeeze is going to be a GME or an AMC. And if you do, you're going to overstay your welcome and you're going to lose everything that you had. So that's something to remember also.
Mm-hmm.
We had great gains in Carvana, and I'm very happy with how it turned out and how I managed it.
Well done. Well done. Trav, what are you looking at? I'll tell you guys too. I've been hunting for trends, and I know nothing about this space. I know, Trav, I think you've done quite a bit of work on this, but just on like climate change and with things heating up, I've been seeing a lot of articles like this. Heat waves in the US and Europe, virtually impossible without climate change, study finds. Like, yeah, duh. Like, but we're having like the hottest summer on records in a lot of places. And I was just looking at this and I'm like, where's the opportunity here? Right. Cause I know there's potential downside and risks, but like, what are the areas that investors and traders could look at? I know I know nothing about like carbon credit trading and things like that, but I just started to build a list here on Exploding Topics, which is a sponsor of the show, by the way. Thank you, Exploding Topics. But I don't know. Do you guys have an opinion on this? Or if not, any other trends you've been looking at?
Yeah, we talked a little bit about some trends recently in a couple of the Daily Doe newsletters, some specific things I was looking at. For instance, I mentioned Barbie, the Barbie movie, whether that could drive Mattel stock higher. We talked a little bit about Crocs. That's been trending. They've been basically sold out of some of their new sandals, and some interesting potential trends there. Then there's some of these broader trends like you're talking about that take years to play out, your mega trends or your macro trends, and climate change certainly is one of the biggest of those, AI being another one. There's a few others, but climate is really interesting. We've certainly seen some investable opportunities there, things like EV stocks or solar stocks. Those could potentially continue to be interesting places to fish because you do have the Inflation Reduction Act still dumping tons of fiscal spending money into some of those sectors. You're going to have a significant amount of grid infrastructure build out over the coming years to help enable that, to help enable the energy transition. We've even outlined potential ideas like in the past, such as NuScale, which is developing some of those small modular nuclear reactors. I do have some concerns there about what does the actual long-term business model look like? So that's been something that's been on my mind too. And it's been hard to get behind that trade because of that. So I think from a long-term investing perspective, if you want to do more passive approach, there's some ETFs out there that you could probably just ride that mega macro trend out, just like set it and forget it type of deal. And that might make sense for more active traders. I think we've been compiling those lists of like EV stocks and solar stocks and alt energy stocks, even stuff like Generac last year, ticker symbol on that's GNRC. Last year it fell to like a multi-year low. And that's an interesting one because they provide backup generators, and a lot of those backup generators are starting to be sold more frequently because people are worried about the grid going down. They're worried about, the heat waves, which have taken down the grid on certain days here in Texas, even during, other time periods with extreme weather, and in other places, that becomes a problem. And so people are trying to become more self-reliant and resilient with generators and things like that. So that one's had a great comeback this year. I don't own it currently. Unfortunately, I think I missed my entry price by just a few bucks. I had an alert on it, but maybe we'll get another whack at that. So I've got a pretty big long watch list of some of these companies that I think are an interesting play on these trends. And it's just a matter of waiting for the right times to strike. So yeah, I definitely think there's going to continue to be a lot of interesting potential here in the alternative energy and climate sector.
Nice. Generac has a nice little setup on the chart there. Did you see that?
Actually looks like a potential breakout.
Yeah. It doesn't look too bad.
Yeah, we'll keep an eye on that. Maybe Trav can write some more about that in the Daily Dough coming up.
Absolutely.
Yeah. Awesome. Nick, what are you looking at? Anything to pay attention to over the next week?
Well, I'm just trying to get through earnings. I'm not in any big hurry right now with where the market is and where valuations are with certain things, for the most part. So I've got some cash on the sidelines that I've built up over the past, 6 to 12 months that I'm still waiting for the right opportunities, and earning season can be those times when you get those big drops and those opportunities come. So especially with, the overall risks of what companies are going to say and what they're seeing with the consumer. I just want to get more info. This was one of the main quarters that we really needed to hear about. We kind of knew what Q1 was going to look like. Q2, definitely one of those kind of up in the air situations. So it's going to really set the stage for the rest of the year, I think. And a lot of analysts are expecting the back half of the year for growth to accelerate. So if we hear that that's happening, maybe people can start to get a little bit more comfortable with deploying more cash into the market. But, I've got my shopping list, and it's got things like Lululemon on it, and it's got things
you shop at Lulu quite a bit, don't you?
Yeah, I'm a Lululemon addict for sure.
Have you made more on the stock trade than what you've actually spent in the store?
You'd be happy to hear yes.
Okay, that's
because
good.
I added up all my pieces in my closet and did the math, and I was like, okay, I'm ahead.
Did you really?
This is good. I mean, I bought it at like $55 a share or something like that. So I better.
Yeah, that's been a hell of a
ahead.
trade. That's awesome.
Yeah. So, I've got my list that I'm keeping an eye on, like things like, Salesforce. I wanted to pick up some Salesforce a while ago. I wanted to pick up Shopify. But a lot of these names just never got to the valuations that I wanted to see and feel comfortable with.
Yeah, makes sense. Well, I'll tell you guys what I'm looking at in the crypto space. So, there was a lot of euphoria a couple weeks ago when the Ripple lawsuit situation had an announcement where in some instances the Ripple tokens are not securities, and other instances they are. Then there's this big reaction on that day, but there was really no follow through after that. So what I'm looking at here is the total 3 market cap. So this is crypto market cap excluding Bitcoin and Ethereum, and you can see that has not shifted the macro downside trend, right? Or the bear market for altcoins. We've still just been seeing the sell-off. And it was like that day, a lot of alts popped, but ever since then, prices have just kind of faded off again. So you can see Ripple, again, it had that big spike day, but prices have not taken out that daily high. In fact, they're just kind of flat to down. So I'm still being very cautious with alts. I mean, there are some trade setups that are starting to develop, but for the most part, I'm most stoked on Bitcoin. we're still kind of coiling up around this 30,000 price level. We're at some moving average and Fibonacci support right now today. So what I was saying in the community in our Discord channel was that I was waiting to see what kind of price action we got after the Fed announcement, which was kind of a nothing burger. You can see we don't really have any kind of compelling reversal price action yet. And price is just kind of still in this range, but we are at support. So the bull trend is still intact. I'm still holding partial position long and waiting for that 31K breakout. But that's really pretty much it. As far as all the other alts go, just waiting for that kind of that bigger trend to break on total 3, where if we can get above multi-month resistance here and start to see some breakouts, that's when I think we'll get an alt season. And if that does happen, I think Bitcoin dominance will fall back below the 48% level. But for now, nothing's really changed. There was a lot of excitement on that Ripple announcement day, but everything since then has just been kind of lackluster.
I guess it's a good thing that there's that negative correlation right now with Bitcoin and the indices.
Yeah.
I mean,
Yeah,
you'd want to see it move with the indices, but I guess you could see that as a positive. Right now.
When there's negative correlation, that's definitely a positive. That means that Bitcoin's trading with a mind of its own. Obviously, when all tides are rising, that can be a good thing as well. But we're not really in that environment right now, right? Like large cap tech has been dominating the gains in the stock market, and large cap crypto has been dominating the gains in crypto. Have you guys noticed that that's started to shift at all in the stock market, or is that still kind of remaining to be true?
I think that things are getting better on that front, right? We're starting to see more of the market participate in gains. Last I looked at it, at least.
Yeah, the rally has been broadening. I mentioned earlier financials being a bright spot. Energy has actually been a bright spot. Crude's been slowly ticking higher over the last couple of weeks. And so energy stocks have been recovering pretty well just in the past couple of weeks. And so the Russell index hasn't caught up to the S&P and the NASDAQ, but it's been gaining a little bit of relative strength in the probably past 6 weeks or so. And so that's good to see. You do want to see the rally broadening out. And I posted a reply to someone's tweet last week. You know, people were still saying, oh, all the gains in the indexes are still only being driven by the mega 8 top 8 tech stocks. That's not true anymore. If you look at the actual breakdown, you know, you've got a significant percentage of the S&P 500 positive now in the year. You've got, even excluding the mega 8, you've got, I think, 8 or 9% overall aggregate returns in S&P 500 companies. And so, yeah, I think the rally has definitely broadened out some, and we'd just like to see that continue.
Yeah, the Russell is testing multi-month resistance and the high of the year here around 2000. So if that can break out, I think that'll be a really good sign for smaller companies and get more breadth.
Absolutely.
Awesome. All right, guys. Well, anything else that you're looking forward to next week? We can kind of make this a little bit of a shorter show. I've kind of said my piece about crypto, just kind of keeping an eye on that. Also, if anybody's working on any startups, feel free to send me a DM through X or Twitter or whatever the hell we're calling it. Definitely looking to invest more in the startup scene again. I've been reviewing deals, having a lot of calls with founders, and even looking at some syndicates. So feel free to reach out to me. And also, we are doing a promo this month for the wealth building community. If you go to wetalkmoney.com/community and use the promo build wealth, all one word, that'll get you 50% off your first month or quarter. Come into our Discord channel, come to our classes, check us out, and come invest and build wealth with us.
Absolutely.
All right. Anything else you guys want to cover before we wrap it up?
Watch out for doom and gloomers out there. They might make you lose some money.
Yeah, we talked about that. All the perpetual, the Great Depression is coming. Meanwhile, the markets just continue to compound over time. Are we going to have recessions? Are we going to have market crashes? Yes. Are those buying opportunities? Yes.
Did you see
not
that?
Invest because of fear? No.
No. Did you see that Robert Kiyosaki tweet where he's still calling for a depression?
Yeah. I called him out in the newsletter last week, and we talked about the false prophets of doom, and then Trav added about the false prophets of prosperity, sell side analysts. So you've got bullshit on both sides, but
Right.
I think, as an investor and as, teaching people what we do, it's like, you got to learn to think for yourself. And yeah, it might feel good to be paranoid. It might feel good to read the fear headlines. There's a lot of people that sell fear. It's very profitable to sell fear, but it's even more profitable saying screw all that and invest anyway.
Yeah, and keep looking at both sides, which is why you should be continuing to watch our podcast.
Here.
Awesome. All right, guys. Well, thanks for joining us today. Make sure to subscribe to the audio version of the podcast. Leave us a review. Helps out a lot. Like up the video if you're watching on YouTube. And we'll see you next week. Take care.